gents. Thank you for joining me on this fine, volatile evening. So today, talking about traded development phases. First of all, I was going to look at the markets, but you know what? There's so much going on, and we can just discuss things. I've got a little extract from a book I want to read, and then we're going to get straight to it because I think this is quite an important thing. So, yeah, welcome. Who have we got in the house as usual? We've got the regulars, all okay. Thank you very much for the sound check, Leslie. Let's have a little scan. Who's here today? I hope you're all weathering the storm. Obviously, yesterday, super volatile day, massive reversal on crude, massive reversal across the indices. Just hope you're staying safe. And remember, actually, this extract from this book is going to help. You know, managing risk, live to fight another day. If you're in tune with things, great. I hope it's working well for you. If you're not, step back, wait for things to appear as you'd like them to before you commit to taking risks. So very briefly, crude oil was getting absolutely slammed. And all of a sudden, I just saw coming through the news wire, which I'm kind of trying to keep away from because there's so much stuff back and forwards. It's always after the fact as well. Unless it's something major and you get continued move, like, okay, fine. I understand why that continued moves happen. These spikes, it kind of doesn't matter what the spikes are happening. Crude basically popped back up because I was reading it from here. U.S. intelligence has begun to see indications that Iran is deploying mines in the Strait of Hormuz. So there you go. As everyone's thinking everything's good, it's going crazy again. Interesting, Nasdaq's only back to where it was last week of all the volatility. The one market that is trending in the most clean and beautiful trend, and anyone who's on it, I take my hat off to you, because while everyone else is getting sucked into volatility, Aussie yen has just been going chug, chug, pull back, chug, and it's almost like this perfect symmetrical trend line on the daily. So if you've been on Aussie yen, then you've been completely immune to all the stuff that's going on. A little bit of a wobble, but you know, our trend resumed, and maybe that suits a lot of people, and I don't blame them for being focused on that sort of thing. Anyway, let's get to stuff. Good evening to you, Arthi, Adam, Amar, Adam's on. Good to see you, buddy. Alison, Andy, Anne, Anthony, Arti, Bettina, Chandu, Dagon, Emma, Dominic, Denise, David, Errol, Felix, gentlemen, good evening. Frankie, Gary, good evening. Gary, George, a couple of Georges, Gokul, James, John. I'm missing some because you guys are logging in as I'm skimming through. Kay, Lana, Leslie, Luke, Marinus, Martin, Matthew, Mats, Michaelis, Mundhart, Neil, Nicholas, Norbert, Paul, Perry, Peter, Pete, Resenga, Rob, Roy, Sean, gentlemen, good evening to you. Ladies, good evening to you. Simon, Stephen, Sue, good evening. Sunday, Susan, Sven, Thomas, Toby, Yulia. All right. You know he's not in today. Where is he? Rhino is not in. He's the guy who always catches my. There's someone coming in says waiting for name. Anyway, we're not going to wait for that. Good to hear from you. Or not to hear from you. Good to see you, ladies and gents. If you want to type a question in, type it in there. Get towards it at the end. There's a few hands raised. I don't know. There's no. We ask the questions. I'll try and get to in the end. I know last time I completely screwed it up, right? Because I stopped screen sharing and I lost all the questions. I will not do it this time. It's because we're flicking back and forth to the charts. So we're in this screen now. That will not happen. Okay, so before we get started, if I may, let me read you an extract from this book. Now, this book, can you read that? Is that Trading for a Living? I don't know if it's flipped on your screen. Maybe it is. It's Trading for a Living by Alexander L. This is one of the first books that I bought as a trader, and it's actually quite interesting reading it, 20-something years later. You're just reading the stuff going, I had no idea where I was reading. I was just marking stuff off going, that sounds like a really good idea. Got post-it notes in here saying trend and trading range. No idea the difference between the two. Money management, adjust position size to suit, stop position, all this. Anyway, the point is, I want to read you an extract, if I may, about individual psychology, which ties in nicely to what we're going to talk about today, the trader development phases, which maybe is not totally focused on psychology, but there's a lot of psychology in there, and we're going to kind of talk through the different phases of a trader, how sometimes we have one foot in two camps, how sometimes we're going back and forth between these phases, how to diagnose which phase you're in, and also really to highlight the phase where you've just got to keep going and keep grinding it out. Okay, so let's say this is Trading for a Living by Alexander Elder. I don't know why I've lost the cover. The cover was really cool, old school, beige CRT monitors PC. Okay, so number one, I'm going to skim through some of it. I'm not going to say it all word for word because we'll be all evening. Decide that you are in the market for the long haul. That is, you want to be a trader even 20 years from now. Number two, learn as much as you can. Read and listen to experts, but keep a degree of healthy skepticism about everything. Ask questions. Number three, do not get greedy and rush to trade. Take your time to learn. The markets will be there with more good opportunities in the months and years ahead. Number four, develop a method for analyzing the market. That is, if A happens, then B is likely to happen. Markets have many dimensions. Use several analytical methods to confirm trades. Test everything on data and then in the markets using real money. Markets keep changing. You need different tools for trading bull and bear markets and transitional periods, as well as a method for telling the difference. We talk about this a lot of times with context, understanding the regime you're in. 5, develop a money management plan. Your first goal must be long-term survival. Your second goal, a steady growth of capital, and your third goal, making high profits. Most traders put the third goal first and are unaware that goals 1 and 2 exist. We say this a lot. You hear this a lot. Stay in the game, stay in the game, stay in the game. You can't be in the game if you don't protect your capital. By the way, this is just this guy's take on stuff. This is not advice to do anything specific, right? Number 6, be aware that a trader is the weakest link in any trading system. We know this. Go to a meeting of Alcoholics Anonymous and learn how to avoid losses or develop your own method for cutting out impulsive trades. He talks a lot about this in this chapter, and he's talking about the psychology of people who are alcoholics. So that's why the kind of parallel is with that and why he's mentioning that. And the final one, number 7, winners think, feel, and act differently than losers. You must look within yourself, strip away your illusions, and change your old ways of being, thinking, and acting. Change is hard, but if you want to be a great trader, you have to work on changing your personality. So some great advice and ideas there from Mr. Elder himself. I think many of those stood the test of time, as they have done many years ago, and we are still here today. Okay, let's get going, guys. Hopefully we're all in the house now. Good to see you all. Yes, we are. So trader development phases, great quote from, I was thinking of quotes, I was looking at different quotes, and I thought, you know what, it's got to be a Tyson quote. Everyone has a plan until they get punched in the face. Very, very apt for trading. How many times have we come with a plan, an idea of how we're going to trade? All of a sudden we take a couple of losses, and what happens is we then feel like we can't stick to the plan. We have to do stuff that's slightly different. I'm trying to rotate here. Why can't I rotate here? I'm pressing the wrong thing. There we are. Right. Disclaimer, as we know, ladies and gents, we must please be aware, spread bet, CFDs, anything we trade, we leverage or margin, whatever instrument that may be, works great when you're on the right side of trades. Not so good on the other side of trade. High risk of losing money. Understand that, and it can happen fast, especially in this environment now. You thought you were on the right side of crude oil yesterday. Bang, rug pull. You'll leverage up to the max. You're going to get damaged pretty quickly. Please be very, very careful, especially in these highly volatile conditions. Keep things small. Understand the risk. Understand the risk involved with trading with leverage, the spread betting product, the CFD product, whatever instrument you're trading. And just please, please only risk money that you can afford to lose. The market will take whatever you have. If you're not careful, you can pay a higher tuition than you need to. If you're in the developing trader phase, take things steady. There's no rush. Slow down. If you're a bit more experienced, again, you'd be mindful. Everyone who's, even the best traders in the world, the best hedge fund managers, are always mindful of risk, 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 risk. So yeah, please just double check you know what you're doing before you get going. Okay, so the assumption we need to squash. We assume that our trading development is linear, right? We learn more, we earn more, because that's how it works in all aspects, other aspects of life, right? Sadly, it doesn't. We have completely different graphs and plots for skill level and P&L. And again, anything this evening is just my take on stuff. I'm here to share with you things that I think are going to help you move forward in your trading. It's just my opinion on things, you should always kind of make sure it aligns with the way that you think about trading and your risk tolerance and all that other type of stuff. But you think about trading and compare it to any skill endeavor. You know, if you are learning to fly a plane, right? You can see how you're improving because the more you practice your landings, the smoother they get. The more hours you do in the air, the better your radio calls get. If you're learning to drive a car fast around a track, you may not be as quick as Lewis Hamilton, you may be as quick as some of the best guys out there, but as you improve, you start with a beginner, you get quicker, you get quicker, you get quicker, you learn more, you learn the lines, you learn this, and it actually, as the skill level increases, the metric that matters, the speed around the track increases. So they're pretty linear, right? One goes up, the other goes up, one goes up, the other goes up. Not perfectly symmetrical, but generally speaking, trading's very, very different. And you can have the skill that's improving, but your P&L is doing nothing. And it's very, very frustrating. So today, I want to go through these different phases of a trader. I want to prime, I guess, this skill versus P&L gap, how I see things. And hopefully then we can, you'll be able to match the level you're at as a trader and understand perhaps what it takes to shift to the next level. My keyboard's flicking around there. I don't think you can see that, can you? It will distract me, but hopefully it won't distract you. Disconnecting, connecting, connecting, disconnecting. How frustrating. Never mind. So the idea today is to really think through that. So the skill versus P&L gap. So as you compound your skill in trading, you can't really measure it. And this is why sometimes going back and reading old books or looking at old journals, like a box is full of old journals, and just seeing how far you've come, that sometimes reminds you where you were. And you know, we can be very considerate of how we measure performance. Like, how are you getting on with you know, your losses? What are you taking these outsized losses? Are you sticking to plan? There's things and metrics which we'll definitely talk about in a few slides time, but it's very difficult to measure versus P&L because P&L is in our face. You log into your broker, there's your P&L, there's your equity curve. You've got a trading journal, you've got a platform, you see the curve going up or down. It's off, it smacks you in the face, right? And so sometimes as a trader, we connect our identity as a trader, we connect our growth as a trader to that P&L. And I believe that's wrong in the early stages of trading, right? You are trying to improve your skills, and eventually the P&L is gonna catch up, because the P&L will stay flat, stay choppy. It might even kind of downtrend a little bit until things kick into place and something clicks. We're going to talk about that specifically today. Now, you may have heard about the Dunning-Kruger chart, and you've seen all this. We'll show you that in a moment. This is not going to be about that today, because I think as it does apply to traders as well, it applies to anything else. But the reason I want to show you that, and it'll make sense in a moment, is that I'm going to map on what I think of the different phases of a trader, but also make you realize that actually this is true for any endeavor. But the challenge you have with trading is the skill versus P&L gap is so different. So even though you're going through a phase of not really understanding what's going on, maybe thinking it's a struggle, blah, blah, you still don't see the performance increase if you're looking at it from a P&L perspective. So we've also seen Dunning-Kruger chart shown in a second. You get the peak confidence at the start, valley of despair in the middle, and the slow climb back up. This is most traders' first year. So Dunning-Kruger effect is this, and you may think this is exactly how you are in trading. You start out bright-eyed and bushy-tailed. Oh, trading, great, and I can suss this out. Okay, what's a spread? What's a pip? What's support and resistance? What's a trend? And maybe you do all right, and you're at that top of Mount Stupid. Yeah, you've got real high confidence, know what you're doing, but you haven't got any knowledge. And then all of a sudden it kicks in, down you go. Things don't quite go as you plan, and you hit this kind of valley of despair. Your confidence wanes, your knowledge is increasing, and you kind of have this weird scenario where you feel like you're learning more, but actually you're getting worse performance. And that's the place where most traders get fall by the wayside, right? They don't fall by the wayside when they're at the top of the Mount Stupid. I don't know if it's really called that. Is it really called that Dunning-Kruger effect? I don't know. Anyway, they don't really get kicked out there because it's great, right? Just carry on this. Oh, wow, think of all the money that I could be making. Whoopie-doo. And most people, though, realize, actually, you know what? This is a lot of work. This is difficult. and they fall by the wayside in that valley of despair. And this is the same, by the way, for any endeavor that's hard. This is why this is nothing. This is not trading specific, the Dunning-Kruger effect. This is any endeavor. People talk about this, entrepreneurs talk about this on building businesses. You guys may be familiar with this. Maybe the industry you work in, you have the same type of thing. It's true for many fields, but trading is slightly different because you don't actually see this chart. And so you're probably now in either the valley of despair or the slope of enlightenment. You're probably a little bit step forward than the kind of confidence spiking up, but have no knowledge, right? You're probably in, okay, I've got decent knowledge, it's improving, but I don't really have the results I'm looking for. This was a good graphic that had. If you think about just going back to the P&L and trading skill, so your P&L on that x-axis below, plotted in the orange chart, imagine, choppy as hell, maybe it's going lower, but your trading skill is on a completely separate axis, and that's the way to think of it. Sorry, separate plot, that's the way to think of it. It's starting to improve, starting to improve, starting to improve. For ages and ages and ages, that gap will get bigger and bigger and bigger and bigger and bigger, but at some point, then your P&L catches up to it. At some point, if you keep increasing your trading skill, if you keep putting the reps in, if you keep working on your craft, at some point, the P&L catches up to it and you come to that other part of this, which is that of the plateau of sustainability. So just have that in your mind as we kind of go through some of these ideas today. So, and you might be, by the way, you might be going, this is me, man. My P&L is just not doing what I want. I'm stagnating, not doing, but I feel like I'm improving my trading skill. I'm learning more, my knowledge is improving. But just have that in your mind, that chart and that breakthrough point, because that's the objective you're trying to get to, is so that P&L eventually has no choice but to suck up towards that skill level like a magnet. Okay, so phase one, I'm calling this the honeymoon phase. So I'm going to run through these early phases quite quickly, and then we'll get stuck into the meat of it, where the phases I think that most of you guys probably are. And by the way, been there, done it, been all through these phases. It's normal for any person, any trader who's had longevity in the markets, been through the valley of despair, and it feels like you had the valley of all valleys, a valley from valleydom, because it's just so deep and dark, and then clawing back out of it. So anyway, phase one, the honeymoon. Everything feels possible. You just feel great, right? We've all been there. We started out trading, had a few wins, like, this is great. You start extrapolating out how much you make here. If I do more size of this, it's like, whoa, man, I've found the actual secret sauce here. This is brilliant. And your confidence is high. You're strutting around, and it's nonsense. We know it's nonsense, right? We don't know what we don't know. We have no knowledge. We've just got a bit lucky with a few trades, maybe. That's the peak of the Dunning-Kruger curve, right? Maximum confidence, minimum competence. And, quick diagnostic for you. We're going to do this for each phase. If you've been trading for less than 6 months, maybe it's a few of you. That's okay. That's fine. You've already sized up because you think it's working. Maybe there's no meaningful drawdown yet. You're kind of just consuming content, getting inspired by stuff, rather than actually doing work on yourself, work on your trades. Then you may be in this phase. And by the way, if this is you, so I don't think there's many of you on here, but if it's you, be very, very careful. Please do not size up from a small sample size of 6 months worth of trading. I've seen way too many instances where traders have come in, they've been reasonably well capitalized from something else in life, successful, sold a business, blah, blah, whatever it might be. They've come in, modest account, thought they had it cracked, started pushing size behind it, and they were the peak of that Dunning-Kruger curve. And when they obviously buying at highs, right? You go in size at highs, a chart's a chart, and it starts pummeling lower. And I've seen people do some significant damage. So if you're in this kind of phase where you're early on in trading, there's loads of stuff you don't know, you've perhaps not gone through different regimes and stuff, just be careful. Just be careful, because it can be seduce you into thinking you're doing better than you are. And as I put here, sizing up too early on a tiny sample. Be very careful with this. I don't know. I know one guy who, he was very new to trading. He traded gold for a bit, and I spoke to him. I said, what? He said, I quit. I said, what? He said, I realized that I got lucky, and I realized, I looked at, great traders. I spoke to you. I realized the journey was long, and I want to do something else. I was like, you know what? You're probably the first person who's actually quit at the peak of that Dunning-Kruger, got lucky, pulled out the game. It's not for me. I was like, respect to you, mate. It's not for you. It's not for you. Now, other people want to go through the grind and kind of want to work through to the other side. But sizing up too early, you know, that's the dangerous zone here. Skipping journaling, all the kind of stuff we know, right? We don't have to linger on this too much. And the traders who can survive this phase start to build habits before they actually need them. Phase two is the unraveling, if you like. So that Dunning-Kruger, the kind of the fall down from the initial peak. And this is where most traders bail, right? Because the dream, the idea, the ease, is realize, hang on a second, I got to do a lot of work up here. I got to do a lot of work in the market. And the problem, I think, is compounded because many traders are trying to do many things. You know, I always talk about focusing your energy. And so your idea is you're trying to make that as short-lived as possible, that valley of despair. You want to make it, it's done, it's behind you, and now you're kind of climbing up and you want to make that as quick as possible. I think there's ways to compress that Dunning-Kruger, and one of them is to be more specific and intentional about the way you're trading. One is to be absolutely dialed and locked in with your mindset and working on any of the challenges you've got that come to that relate to discipline, that relate to sticking to plans, all that type of stuff. That can shorten that. If you're not careful, you end up with a Dunning-Kruger curve that's so damn long, you're trying to grind your way up, and it's like another month, and you don't want that. You want to compress it. It's going to happen, but you kind of want that to be quick and go, and then climb your way out of it. And strategy hopping, all the type of stuff. So in this fall lower, when things feel bad, you know, your knowledge is increasing, but actually performance is decreasing. You know, you kind of realize how much you don't know. But the key here, which I think is separate from kind of traditional Dunning-Kruger, is we don't have to know everything as traders. You know, the massive mistake I made early on was knowing everything. That's why I got this massive knowledge about all these indicators and stuff. As I went down rabbit holes, and then go, hang on a second, you know what, my edge is probably in reading short-term price action. Focus on that. Bang, here we go. You know, there's your breakthrough. There's a Dunning-Kruger coming out. But so not spreading yourself, not getting falling into the trap of knowledge, expanding knowledge into different indicators, options, this, that, the other. Focus it. The knowledge increase should be how knowledge about your mindset, how your behavior, your bias, some of the nuances with the strategy and the style that you trade. You know, you trade exhaustion, getting knowledge about that. That's where the knowledge growth is, not spreading it so wide, because I think you spread yourself too thin. So if you're in this sort of period, let's diagnose. I'll slow down a bit. Let's diagnose a little bit to find out if you're in this kind of unraveling phase. Maybe you've changed strategies more than twice in 3 months. Your biggest losses are probably from here, from emotion, not just clean trades that failed. Often traders blame the market. They did that. The big boys did that. You know, the market. You haven't quite got into the point in your brain yet where you go, you know what, the market does what the market does. The market doesn't care about me. The market doesn't care about anybody. It will do what it wants to do. It's not something out to get me. I'm just completely misaligned with what's going on. And you end up risk changing per trade based on how we feel. This was something that got me massively. You know, I was very, very bad and poor in the early years of adjusting the risk dynamically, what I thought dynamically, and not really, and it being more of an emotional flow as opposed to a considered adjustment. You know, now if I don't want to adjust my risk dynamically, absolutely fine. You know, my plan allows me to do that, but it's much more considered and based on logic and regime and the expected the probability of the trade working, the expected outcome, that type of thing, as opposed to, you know, when you're on that Dunning-Kruger roller coaster, well, I'm just going to triple my size because I really want to get that money back that I lost. But you're not saying that to yourself. You kind of justify it by saying, oh, well, actually, I'm doing more size because, yeah, it's a great trade. You're probably not in that phase yet. All right. If you, so some sort of mistakes here with the unraveling is to, and we've all been through this, right? You assume a strategy isn't working when it really is either in your brain, you're second guessing it, the execution of the strategy isn't effective enough. Talk about increasing risk there, and not bothering with some of the things. Well, I don't need to journal. Yeah, maybe not for me. Others maybe need to do that, but I don't. You know, some of these common things that you have in that unraveling kind of slope downwards is, you know, just some of the stuff that really you should be doing. Okay, so let's move into the invisible middle, because this is where I think most traders are. I'm getting alerts here, but I think you can still see me fine. This is where I think most traders are. So let's solve this problem. And you're kind of in a situation where you're actually doing things right. Let me just turn that off there. You're doing things right, yeah, but your results are pretty stagnant. You're probably not losing now like you were in the curve, that kind of falling off the cliff, but you're just stagnating, and there's a frustration that the results are not indicative of the effort you're putting in. Now, if we were to take the effort and results and put it into another skill, as we talked about earlier, let's say driving a car around a track fast, it's an easy thing for me to visualize, hopefully you too, your speed would be increasing now. You'd have maybe have a lucky couple of laps at the beginning, and now you're like, oh gosh, I'm spinning off and doing this, and now you're getting quicker. Now you're learning the balance of the car. Now you're learning to kind of adjust bits and pieces in the car, your lines, whatever it might be, right? And you're seeing improvements to the important metric that counts, is your lap time. Trading is not like that. Remember, there's the gap between the P&L and the skill curve. This is where this is kind of increasing and increasing and increasing and increasing. And the further it moves, the more frustration you have, because we're still looking at P&L, because that's the metric that everyone's got into trading for, right? There's not make any qualms about this. This is the way it is. And you're kind of in this middle ground, and a lot of people just get a little bit tired of this. You're not blowing up, but you're not really going anywhere. You're up, you're down, and it feels a little bit lonely, because there's nothing exciting happening. You're not having blowout, having great months. It's just like, oh, another day, and this is where you start to get despondent, right? This is where you start to doubt, because you're looking at the P&L, right? And if you were to look and have some sort of skill metric that you can look at, whether it's listen, there's something else I can look at to judge. We'll talk about this in another slide. I don't get ahead of myself. But this is where you're building that skill. You're putting the reps in, and to the point where it has to snap up. The P&L has to catch up, because you've just done enough reps and put enough P&L in. So let me move you to here. So you're thinking, the P&L becomes flat generally because you've improved some of the major damaging things that can happen to traders when the equity curve is getting slaughtered. You're quite good at cutting losses. You're not going on tilt. You're not making these massive mistakes. You're not oversizing on stuff. You're not doing these kind of mistakes in that valley of despair, or that mode where everything's just going bad. You're actually quite good. And these are skills you developed, and you don't realize this at the point, because all you can see is, I've been doing this for years, I'm not getting anywhere, oh my God. But you don't realize actually that your skill level's already improved, because you've steadied the ship, you've calmed things down, and so your improvements become, okay, I can see some improvements, but it's still not there. It's not moving the equity curve. And the gains from better decisions I put here are offset by market variance, because the market will still shift regimes. The market's going to make it any easier on you just because you're a little bit more experienced. It's still going to have that variance, and you're going to kind of have this and have this. So, and this is where your skill line and P&L line are the furthest apart. This is where it's the most frustrating, because, and this is why I put here, it's exactly why it's so dangerous, and many people fall by the wayside, because the one mistake that you can make here that will just take you out of the game is acting out of frustration, not respecting or not accepting, sorry, it's probably a better way of putting it, the fact that the differential, the delta between the skill level and the P&L is going to increase. It's going to get bigger and bigger and bigger, and being frustrated that is there, and doing something irrational to try to close the gap. And because you're not really thinking it's inevitable, I just need to keep going, I need to keep grinding it, like we were saying with the Dunning-Kruger, just up the slope, and eventually the P&L will catch up. Except that you end up doing something wild, like over trading, or just switching strategies randomly, or mismanaging a trade, or going on tilt, all this stuff, because it's born out of frustration. It's not the early mistakes that you made when you're in the your early journey of coming off the top, so to speak, of Dunning-Kruger, but it was more, it's more like out of frustration. I've been grinding this, and I'm just getting annoyed, and I can't take it anymore. And so to work out if you're in the middle here is, have you been following rules for kind of 3 months plus, and your results are just pretty meh? Your losses are smaller, but when I say cleaner, I mean you don't have these big damaging things from rule breaks. If you have that, then you're on the journey. You're in that invisible middle, as they call it, where you're doing the right things. You're following the rules of the plan, and you're stubborn with that. Good. You're not getting this massive equity curve kind of eat like a bird, beep like an elephant, we say. You're not getting this type of thing. And you can talk about your edge, you can talk about your specialism, and you feel like, yeah, I'm specialized, I'm focused on this, I've got rid of the noise. My journal, I'm journaling, I'm improving on stuff, I'm improving my entries, I'm improving my context analysis, I'm improving my ability to take a loss, I'm not taking a loss so personally. I'm kind of looking at the bigger picture over the month or the quarter, the P&L. I'm stepping back when I don't see a trade that aligns with what I'm trying to take. All these things that we could talk about all day long. You start to do that, but the P&L is just not there. And so this is where you kind of in the frustrating middle where you go, oh, what's the point? I feel like my skill level is increasing, but my P&L is not. What's the point? And this is the massive, like, apart from the kind of, let's say, the gambling crew come in, get to trading, and they're done after a couple of trades. They're like, it's not for me. But for the serious traders who are committed, showing up to webinars like this, doing the work, reading the books, doing the journaling, doing the analysis, taking it seriously, no matter how much time you've got, hour a day, couple of hours a day, whole day, whatever, it doesn't matter. It's your intentions and your standards. This is where a lot of people fall by the wayside, because it feels like failure because you're still measuring your performance to the P&L. And of course you are, because that's what trading's about, right? I'm not here to say don't look at P&L, look at P&L, blah, blah. Fine, you're a human being. You want to, that's the metric that matters to you, so what you're in there. Just like the metric that matters if you're a racing driver or trying to be quick around a track is the lap time. And so, just remember that, we can interpret absence of results as absence of progress. And this is where many traders don't make a big deal of this, right? They don't go, I'm quitting, I'm never going to come back. They just pause slowly. They don't take a trade for a while. They've lost their ambition. They've lost the drive, lost the focus a little bit. It's like, another loser. Not, and they kind of just drift off, and the account goes dormant. Eventually, they forget. They kind of just maybe close the account or draw everything away. So, the only way to tell the difference is kind of seeing if you're growing and doing the right thing is to go through these journals, and you look at things that are important, like, is your process improving? And what does the process mean to you? It's like, I'm pulling the trigger when I said I'm going to. I'm sticking to my stop loss. I'm holding the trades I say I'm going to hold. I'm adding to the trades. All the stuff that we know, right? If you're improving that, then you're on the right track. And the P&L may not show it, but it's there, and eventually it will show. Are your losses getting better? Like I said, cleaner, better. Is it a planned loss? Hey, I took this trade. I was risking 1R, looking for a breakout. It didn't happen. Done. It was part of my plan. No big deal. Versus emotional swings, over trading, getting into trading substandard stuff that really you've got no business trading. You and I both know the difference, right? We've been to both of these, and you can understand the difference. So if your losses are kind of more normal, part of the game, part of the system, part of the strategy. And the third thing, can you describe your edge? So, one sort of benchmark test I often like to say is, if you're able to, I call it the elevator pitch, right? If you're able to say the type of trader you are, and that's your North Star, I like to trade reversals, on the DAX or whatever. I like to trade the opening range breakout on the Dow, or I like to trade news-driven events, or whatever it might be, right? The focused edge, if you can describe that very quickly, then great. A lot of traders, they're doing so many things, and so maybe that's stifling your growth a little bit. So think about this as a sidetrack a little bit here, but think about being able to describe your edge without hesitation. My edge is spotting short-term inefficiencies on the open, or my edge is using the VWAP as I'm using the VWAP as a framework to a VWAP magnet type trade. This is not the great thing, and you've got to think of it a bit more clearly than this, but you get the idea. You have some sort of specialism, your edge, that you're able to articulate very, very easily, right? So price action. Price action, looking for short-term inefficiencies, reading price action. Perfect. There you go. That might be quite broad, but that's your edge. Peter, looking for breakouts, higher time frame, pullbacks to the breakout level on a higher time frame on the currency pairs, indices, commodities. Okay, fine. Whatever it might be. So if you have this, your process is improving, your losses are getting better, you can describe your edge without hesitation, then you're probably just in that climb. The gap is getting bigger between the skill level and the P&L level. And so, if you're in it and you're committed to trading, then probably stay and keep on track. Now, if some of these things aren't true, you're like, hey, my process isn't improving. And by the way, it's never going to be linear. And you're never going to kind of, the skills are roughly, that's a moving average, if you like, of a skill level. You're going to have times when you screw up, you make a mistake, things don't go to plan. You have a couple of days where you took a trade. Of course, you're a human being. You accept that's going to happen. But generally speaking, you're improving. Maybe you take 10 crappy trades over a month last month, and this month you take an 8. Next month you take 6. That's improvement. It's not an instant fix, but it's an improvement. So are you improving? And if you can answer that you are improving, then that's working. You're climbing your way up. That Dunning-Kruger curve that applies to trading and every other endeavor. So it's not me making that curve up. It's something that, I guess, Mr. Dunning, Mr. Kruger, or was it Mr. Dunning-Kruger? I don't even know who the hell did it, but made it up and said, hey, this is for any endeavor that's worth pursuing, you are going to go through this. And so, I can say stuff and I can talk about traders I see in my own experience, but you've got a chart, a template here to think, hang on a second, yeah, that makes sense. That makes sense why the path is slow, but just reminding myself that actually the disconnect between that's my skill, but my P&L is kind of more flat as we go up the curve. As you start going up the curve and improving your knowledge and your skill, the P&L is flat and eventually it catches up. That's the difference between trading and any other type of endeavor. All right, so let's move to phase 4, the breakout phase. The phase we all kind of want to get to, the phase we're rushing to get to and pushing too hard to, where the P&L catches up with the skill, right? And this is, something shifts, right? It's never the way I've described this before. You kind of look around at your P&L and go, oh, right, okay, yeah, that's where it's a non-event almost, because you've just been working so dialed in and locked in on improving your skill, improving your focus, improving your journaling, improving all the stuff that matters as a trader. You are so dialed in. Nothing is going to deviate you from the plan. Nothing is going to move you from the path you have. And then you look around and go, oh, you know what, that P&L's all right this month. Like, wow. And that's the kind of thing it is. It's not some epiphany or some massive unlock. It's lots of little unlocks along the way, lots of ideas, lots of thinking about things differently, how you categorize this in your brain, how you do this, those are the things, the simple, clearer, cleaner, confident trading, just that's when it kind of things start to fall into place. And by the way, I probably have simplified this a little bit. It's not, oh, great, you get a breakout and I see you're fixed and done, and whoopee-doo, off we go, and we're going to go to the stratosphere. You might get a false breakout, right? You might get your P&L catching up and then it falls down a bit. And his skill level, once you keep working on his skill, it's spreading, the spread's widening, then it catches up. So it's not going to necessarily just be an instant thing. So I'm obviously, I'm treat this as a mean or a moving average, if you like. You start to see setups more clearly. You start to, as we said last week, not care and not try to predict and worry if you look at the thing and go, I've got no idea where that's going, and feel totally comfortable with it. Totally comfortable with looking at a trade and going, yeah, I'd probably go, oh, that's not for me. Really nonchalant, relaxed, calm. If you're in that phase, then that's the breakout phase. And it's like, well, I've taken a trade, great. Oh, I missed that. Yeah. So, it's just getting to that point. And it's sometimes loosening your grip on stuff a little bit. You'll talk about this, if you're gripping on so tight, you're forcing this growth. And often that's the one thing keeping it underwater. And your confidence is built. We talked about piggy bank confidence, making those deposits. You've built it over time. You've earned it. It's not just a spike in P&L from getting lucky from a couple lucky swinging Hail Mary type trades or swinging for the fence type trades. You've built over time. You've kind of recovered drawdown. You've gone through different things mentally, challenges. You've put all the work in, and so you feel like it's earned. Your standards are high. The way you approach the market is dialed in. You just approach it from a different perspective, and this is where kind of things start catching up. This is kind of repeat myself a bit here. your monthly, maybe this is kind of more succinct, monthly results start picking up, right? Even if you've got days where you couldn't do anything, weeks weren't great, but actually overall, you start to see a bit of a growth in the P&L. Happy to sit out and do no trades. No trades more than, yes, default is no position. We said about that loads of times. The default is no position. No position is a position. You feel comfortable with it. That's the difference. You feel absolutely comfortable with it. You're not strategy hopping. You've got more discretionary judgment. I'm big on this. I'm saying, okay, you've got rules to guide you, but ultimately the edge, I think, lies with the human and making a decision, assessing context, regime, all this type of thing. And, you've got a process that you followed, you're doing it, and then the results start to follow. And by the way, you don't know when this is going to happen. There's not some date that goes ding, ding, ding. You've been doing this for a certain amount of time now. The P&L is going to catch up. And that's why it's so tough. You don't know if it's going to be next month, 10 months. You just don't know. Some mistakes to make here. Everyone's done this, who's gone through this period. Go, yes, this is looking great. Now it's time to size up. Oh, my P&L is really ramping. It's been ramping for a quarter. That's the first time I've had, okay, well, more size. And you often go back. You end up going back a phase. Talk about that in a moment. You do the damage. So if you're in a breakout phase where things are happening, just be careful about sizing up too much too soon. You can bet in, just keep growing and growing and growing and growing. Think about doing the size later on. We never arrive, by the way, as traders. And you speak to, I've spoke to Paul Tudor Jones, but you hear Paul Tudor Jones talk, you hear Stanley Druckenmiller talk, you hear some of the greats talk. Even those guys who are making obscene returns, managing huge amounts of money, they never say they've got it. They're so aware that there is no arrival. It's just the process. And, if you start to back off the process, then things start not working. It's only the process and your journey and your experience has got them where they are now. There was a time, I think, I don't know when this was, but Paul Tudor Jones hired, I was speaking to us literally minutes ago with another trader. Paul Tudor Jones hired Tony Robbins, motivational speaker guy, to kind of work with him and work through, because he was like, hang on a second, I've been trading for how many years it was, 30 odd years, and I can't seem to do anything right now. And Tony Robbins, he's charging him 25 grand an hour, whatever the hell it was. And, he worked through the ideas with him. He worked through the process with him. And he said, go back to what you used to do. What's your process? How do you think about stuff? So he helped him work it through. And fine, he had 25 grand an hour to be able to pay to have, 10 hours a week of time with Tony Robbins. But the point is this, is that, it always comes back to process. What got you there, you need to keep doing more. The irony is traders get some level of consistency and then it breaks, and I speak to them, I go, what's happened? Well, I used to do this. Well, have you stopped? Well, I didn't think it was. Well, what do you mean you didn't think it was working, man? It's got you from there to there. You put that mega month in, that mega quarter in, and then what's the thing you stopped doing? You stopped journeying properly. You stopped preparing. What are you talking about? Just go back to doing. I know, sometimes it takes someone to say that, right? To realize it yourself. And it's a fragile phase. Overconfidence, BSD syndrome, what that means, can send you back to phase 3 or even kind of phase 2. And phase 3 of the stagnation, kind of the skill level increasing, but the P&L not. Or worse, you go back to phase 2 and you get another drop. I've seen traders do that, and that's a very unpleasant place to be. So, it's a never-ending process, but enjoy. That's why we say enjoy the journey. Enjoy what you do as a trader, not just the clicking of the button, click, tap, tap, tap. Enjoy the whole act of trading, the coming in and you looking at the markets and doing your analysis and reading your books and all the stuff that comes with it. If you can enjoy that, then you don't have to get the enjoyment from just click and see what's happening with the market. And I've said, keep doing exactly what you've got here. Don't fix what isn't broken. As I said, I've spoken to traders before many times where that's the case. They start doing stuff differently and you go, well, why? Anyway, the compounding phase is where things start to really kick into gear. You start sizing up. Trading feels really good. It feels like an endeavor. It feels like just a craft that you have and you're just getting good at. The amplitude of highs and lows are way more compressed. People often say, how do you feel about losses? They say, yeah, well, because you've had so many or you've had so many setbacks before, the lows aren't as brutal. You speak to someone who's trading, think of myself, like 20 years ago when you have a brutal loss, it feels devastating, or you have a drawdown, it feels like someone's stabbing a knife in your heart, right? Whereas you get more experience, you've been through it before, it's fine. And to say, you have good big upswings in your P&L, it's like, okay, well, been through it before. So it just compresses things out and makes things a little bit easier. Again, it's time. You lose your ego. I just think as great traders, just go, you know what, I'm not here to prove anything. You're not here to make a call on where the market's going. It doesn't matter. It's like the perspective of a trader is just to build accounts, grow, compound your skill, improve your discipline, just keep working on stuff that got you to where you are. Improve your confidence, not too confident. It's a fine line with trading, as well as obviously the equity curve at the same time. So just a quick note on this, going backwards is normal, even though it stings. It's okay to feel like you are progressing and improving, and you have moved from kind of phase 3 to phase 4. You're in the breakout phase. You've kind of gone through that kind of slog, and you're in the breakout, and then you kind of fall back and you think, oh no, I've done all that work and I've gone back. That's okay, and that's normal, by the way. It's going to happen. Life happens. Market regime shifts and you don't react quick enough to it, and it can push you back to phase 3. So it's not like this is locked in once you go there. And that's it becomes quicker to get back up to it. So if you kind of have a setback and you go back to stagnation, your skills improving, your P&L's not. You can't take away from the skills you've got. You can't take away the high watermarks you've had with performance, right? Those are always going to be there, and so it becomes quicker to recover back into the compounding phase or back into the breakout phase, depending where you are. So if you're in that phase now where you've got that slow grind and you kind of feel like you're wading through treacle, you get a bit of a breakout. It might be that you step back a few times first before you get a real breakout. P&L starts breaking out, great. You're like, how's working? I'm in the breakout phase. You get that for a couple of months and then it kind of falls back. That's normal, and you will dance between 3 and 4 or even 5 and 4 for a while, breakout and compounding, and maybe even that 5 to 3. But that's normal. So don't worry about that if you're kind of through that phase. So final thing I guess here is to stay in the room, right? You read these books and you hear traders talking. No one's sort of super smart. There's no trader who is like just this absolute genius and we're trying to compete at a massive high IQ level. If anything, sometimes that hinders some people. Discussion earlier with a trader. They just had that invisible middle. So that invisible middle of the grinding and wading through treacle, and it feels like, oh gosh, it's just, nothing's happening. It's what's invisible. Nothing's happening. I don't see anything. Why can't I see the performance? I improve my skill. I'm doing the reps. I'm doing everything I'm supposed to do. Performance is not there. It's because it's the grind. It's because it is that slope and it is a trudge, and you're trudging up that hill. And for many people, they go, no, it's not me. I'm done. It's not getting what I want. But that's the key. It's like he's trying to compress that, but it's knowing that actually you're improving the skill. And the ones who kind of get to the other side and get to the breakout, and whatever level that may be, there's different variations of that that look different to each type of trader. For some traders, it might be, reasonable cash. Some people, it might be mega cash, different to each trader, but they didn't, didn't mistake that kind of flat lining for failure. They recognized that there was a delta between the skill level and the P&L, and keeping that in mind again. It's okay. We talk about the bamboo tree, plant, tree, you want to call it? No, is it tree or plant? The seed, you sit so you can water it, nothing happens. All of a sudden it grows something like 6 inches in a week or something ridiculous, right? And it's a great metaphor for trading. You water. You don't just dig it up and go, well, you're not growing, man. Come on. You keep watering, and eventually it catches up, and it's like that breakout of the Dunning-Kruger. And trusting the process. I know it's easier said than done. And when you look at the P&L, nothing's really happening, but it is part of it. It's just saying, hey, this is the journey. This is the journey that, with any other endeavor as well, I just need to measure my progress on skill as opposed to my progress on P&L. Okay, good timing. Thank you, Pepperstone, for allowing me to talk about this stuff that I think is going to help you with your trading. Of course, appreciate them. Go and check them out, pepperstone.com. Any questions, I'm happy to take them, ladies and gents. Next week, whilst you're bringing your questions in, I feel like I lost my voice for a moment there, because I enjoy talking about this. And if a couple of you grab it and go, you know what, that makes sense, job done. Yeah, next week talking about trader identity and self-sabotage. A very important one, this. If you can attend, please do, because this is one of the big differentiators, I think. This is the separator. If you can form that identity of the trader you're trying to become, if you can avoid the self-sabotage, you can get out of your own way, for many people, that's often quite a large unlock. All right, so a couple of questions. Let's go through these. Arta, hello Arta, good evening to you. Mark, this is not, I don't know if you guys can see the other questions actually. I don't think you can. I don't know if there's a setting on or anything. Anyway, I will read the questions. I'll carry on as we normally do. It's not a question. I just wanted to say, when I listen to your webinars, it's like you're talking to me specifically. You know exactly what I'm dealing with. You mentioned all of my struggles and even my thoughts. I don't know how I came about to follow your work since over 6 months ago, but I just wanted to say thank you and I appreciate you spending your time for us. You're very welcome, Arta. I thank you and appreciate that feedback. And listen, it's because I've been on the journey that you have. I speak to traders regularly. I have a deep understanding of the different stages of trading, the feelings, like you say, even the conversations you have in your brain. And so, I'm well placed to kind of have that empathy and have the shared experience, and then maybe offer ways to get over that and improve that and shorten that Dunning-Kruger, if you want to use that kind of as an example. But I appreciate the feedback. Thank you. Ansi Valone says, I call it the invisible mile, the gap between what should be and what is. Yes, very good analogy. And the shrinking of that gap without the overt signals, which make that part a bit frustrating, discouraging for most of us. It is super discouraging and it's super frustrating. And there's no trader around still who hasn't at one point looked themselves in the mirror and go, what am I doing? I'm doing all this and I'm getting nothing out of it. It's one of the only endeavors you don't see growth. You don't see some growth. But like you say, it's going back and measuring, some of the things that there aren't necessarily overt signals. They're subtle signals. They're quiet signals. They're signals that, you're not obvious, but you have to go looking for them. Going, I have improved. I'm doing better. Thank you, Anthony. George says, great, Mark. So very helpful. Appreciate that, George. Jangir says, which was on skill or strategy? Not sure that, Jangir. Thank you, Matt. No question, just saying thanks. Appreciate you, Matt. Jangir, second part of this first question was on skill or strategy that gave you the light at the end of the tunnel, or was it PA strategy? I could tell you a strategy and I could say, yeah, price action, actually it was, and I was well into kind of reading short-term price action, and crude oil happened to be in the right conditions at the right time, and that gave me a kind of a good boost on that year. But it's mindset. At some point you have to take charge of your habits and behaviors. You have to stop doing the things that are sabotaging you. And that's it. There are tactics and ways of doing it. We share these and we talk about these of, let's journal it, let's do some visualization, let's go in, let's trade small, let's put a timer on, all the stuff that we try to do it. But ultimately, what is in your way, generally speaking, and it's working on that. And then the next, and then the next, and the next. If discipline's a struggle for you, work on that until you fix it. That's huge for me. Oversizing, overtrading, it had to be fixed. There's no choice. If you want to do this, you've got to look at yourself in the mirror and go, I need to fix this. I can't just be randomly punting away, taking trades I've got no business trading. Is this how I want to operate? Is this how the best traders operate? No, it's not. So it's sometimes it's just time, and it's just doing the stuff and locking in and getting it done. Thank you, Jangir. Mariner says, it's a great topic, Mark. Well delivered. Appreciate that, pal. Thanks. It's made me look back at my other business as well, with the same steps are identified. Again, thank you. Yeah, appreciate that, Marinus. Yeah, and whatever business you're in, you probably see the same thing, right? You speak to entrepreneurs, you speak to business owners, you hear interviews with great CEOs, and the same thing. They have the same journey, but and actually, maybe it's not fair. Maybe some businesses have the same, where their P&L isn't necessarily showing, but they're improving the skills. They're getting better at sales, they're getting better at marketing, they're getting better at production, they're getting better at operations, and maybe the P&L doesn't quite show until there's a bit of a delay into it. So maybe we're not so unique in trading. Gary says, very helpful as always. Thank you, Gary. Appreciate you being on here. Regulars, by the way, I appreciate all you regulars. It's nice to see a good bunch of people, and I missed you earlier and didn't say your name. I do appreciate you. Thank you for coming on. It's nice to have people on the other end of the line, so to speak. Other end of the line, that sounds like, yeah. You know what? Some sayings you think, God, that's, yes, yeah, you were born in the 80s. Yeah, you're saying landline. Yeah, the kids now, they have got no idea what landline is. Anyway, enough of that. Gary, you're very helpful as always. Thank you, Gary. Appreciate, agree fully with persisting with improving the process over time and not obsessing too much over the P&L, provided you're risk managing well. Yes, Gary, you know, and it's easier said than done. You know, we talked about, you know, Scottish John talks about 10 trade blocks, 40 trade. There's ways to do this, and it is easier said than done because it's the one metric that we're in here for. It's the one reason everybody gets into trading. So one eye on it, fine, but obsessing with it, no. Matt says, I think I'm in this now. Hard days. Oh yeah, related to the other question. Thank you, Matt. Toby says, great session as always. Matt, appreciate your feedback, guys. Really do. It is natural to go through that range of the break. Or is it natural to go through that range of the breakthrough phase and the invisible middle? It feels like I'm there at the moment, but trying to push through and get to the compounding phase. It's normal. It's tough, but you know, you're ahead of where you were a year ago, 2 years ago, how long you've been trading. Take solace in that. Try and enjoy the journey. Try not to be in too much of a rush. And when you kind of relax a little bit, take the burden of performance off and say, I'm just going to grow that skill and the P&L will inevitably catch. I don't know when it's going to be, but I'm making that assumption. And it's not, by the way, I probably should clarify this. You don't guarantee that you're going to get there. There's no guarantee with anything in life, right? But you know that actually, if I just this is the path. Now, the ending's never guaranteed, but I know that every other trader's gone on this path. So if I stick this path, that's giving me the best possible chance that I have. Beth says, thank you so much for the great webinar. Thank you, Beth. It's clear there are a few phases to go through, and I've already noticed some small improvements in my daily process without even realizing it. Good, Beth, good. And by the way, you guys are saying this, please sit down for a moment and appreciate the improvements you've made. Forget about your equity curve, your P&L, which might be the worst thing you're looking at. Like, I don't want to look at that. Just do, you know, Beth and others, just remind yourself of the improvements you've made. Look how far you've come, and just the things that maybe aren't so obvious, but give yourself that pat on the back. We push ourselves so hard to perform. We push ourselves and drive, and sometimes, and it's tough, and we've talked about, I mentioned this on a kind of a traders call, I think, especially as guys, we're like, oh, we can't give ourselves a pat on the back. This is not what we do, right? We pat on the back now, man. I drive and I push forward. And, you know, patting on no one's back, different maybe for others, but do that. Honestly, do that to yourself and say, hey, I've come this far. I'm improving my process. I'm starting to do more journaling now. I'm starting to understand context more in the market. I'm not rushing into trades like I did. Give yourself that reward and you know, hypothetical or a metaphorical, pat on the back, so to speak, and allow yourself to bathe in that for a little bit and say, yeah, you know what, I'm improving. Okay, yeah, all right, yeah, you know, and just to remind yourself of that, because otherwise it can be a real burden, a real slog. Hi, Mark. Happy Tuesday. You get to observe a profitable trader during your journey. Thomas, you know, there's a couple of guys who I used to speak to on Skype. Is Skype still going anymore? I think they only recently shut it down. And one of them was, I don't know where he is now. We're interested to see what he's doing. He was a great trader. He really was. And he had a very different approach to stuff, but he would always say things like, because I would be just in awe of his ability to kind of get these almost pick bottoms. It sounds more amazing than it was, but he was so good at kind of in tune with stuff, and he'd put his order in and he'd get filled on it. And I'd be like, "Oh man, hey, how are you doing that?" And he'd say, "You know, he'd say his name. I'm not a god, you know." And he was so humble with it. And even though it wasn't necessarily a mentor as such, I did learn quite a bit from him, and I kind of learned that you know, his calmness and his patience and his specialism. He was specialized in one sector exclusively, and he would be, sometimes he would day trade stuff, sometimes take out in a day, sometimes hold it for a period of time. He was just looking for opportunities that aligned with the way that he thought about the market, and he was trading that huge size to me at times. Like, oh my God, massive size. And so having some observations there and seeing that I think you take bits away from it. You also take bits that you're like, oh, well, he trades a different way to me. And another guy who was probably similar to me, and we would kind of be neck and neck sometimes. He would kind of make some progress, I'd make some progress. And having this buddy, you know, we would talk quite a lot. And sometimes he put up some big numbers. I'm like, oh, mate, then I put up big numbers. And this is where I think having that trading buddy or pod, if you like, really does help, that you can kind of bounce off each other and help each other. Robert, thanks, always valuable insights. Appreciate you, Robert. Oh, it's an interesting question. Andy says, thank you, Mark. I'm definitely in the invisible middle and looking forward to breaking out of it. Good man, that's the way to approach it. Looking forward to breaking out of it. You're in the invisible middle, you're grinding, you're pushing, knowledge improving. Just keep stuff like this, these webinars, these help. You know, it's not me, go to any webinar you like. I enjoy having you here, of course I do, but just improving skill, thinking about things differently, wrapping things up. Question here from Michaelis, apologies if I've butchered your name, mate. Could you talk about the ethics part of trading? Sometimes I feel like a scammer, sitting behind a screen making money while others grind a 9-to-5 job to support the social system. How does a trader provide value? Do you know what? There's different ways of packaging this. You are getting paid to make good decisions, and you're making a risk-based decision. We are not here saving lives. We are not here building infrastructure. We are not here inventing something new. Then so be it. But we are here speculating on the price of an asset, right? We are here to, some people say, oh, we're providing liquidity and blah, blah, blah. But maybe you can wrap up like that if you like. But I think that we're here to, you know, we are speculating, right? We are making risk-based decisions. We're not under any illusion we're doing something meaningful. But a lot of traders give a lot back to charity, right? There's a lot of traders who give an awful lot of money to charity, an awful lot of profits to charity. Exactly, Thomas. You are building infrastructure if you're paying taxes. You know, you are a net contributor to society. Your job and role may not be quite as noble as the policeman, as the nurse, as the doctor, as the whatever pilot, whatever it might be. But ultimately, you know, if you're a net contributor to society, the stuff that you make from the market, and by the way, you know, maybe you're taking some of that money from other banks, or you're taking your share, you're paying your tax, or you're contributing to charity, or whatever you're doing, you are helping those people. And that's the way to frame it. Like, you're not just taking and taking and taking and taking. There's some people in society who just do that. Me, take. You are a net contributor to society. And so, you know, that's one way of kind of wrapping it up. But some people do think about this from time to time. Maybe you come up with another hobby, maybe to charity, maybe you soothe that part of your mind. You can't be thinking, oh, you know, why am I doing this? Am I sitting behind a screen? Am I, you know, I'm not doing that. You need to find a reason to do it and kind of justify it in your mind. Otherwise, you know, you're always going to have that little niggle in your brain that maybe holds you back, and it subconsciously holds you back. Yeah, Perry says, we're there to provide liquidity. You know what? Yeah, if you trade in direct exchange, a lot of people do say that. You know, you're there to provide liquidity to institutional traders, only for trading on direct exchange, obviously. Another great webinar, Mark. Thank you, Simon. Thomas says you're building infrastructure, you're paying taxes. Yeah. I wouldn't get too, I mean, listen, was it Michaelis? I wouldn't get too, obviously it's something that's important to you because you've raised it, you know, but find a way of being at peace with that, because that may well hold you back if you're that type of person who thinks differently and it bothers you. It's like we had a discussion about trading over conflict, you know, and the stuff that's going on, and saying, well, you don't feel bad about making cash, you know, when you know, there's a war going on, and you know, you're a trader, you can't control what's going on. You're just there to trade price. Now, price moves on good news, it moves on bad news. I think if you overthink that, then you've got to be careful, because you know, ultimately you're there to do a job. You're there to make a risk-based decision. You're not guaranteed anything. You know, you've got to do the best you can and become the best trader you can be. Excuse me. All right, should we call it leaving there? Stephen says, thank you, Mark, top man. Thank you, Stephen. Thank you, Lana. Thank you, Leslie. And yeah, same time next week, ladies and gents, 7 o'clock next week. And I've overrun by 4 minutes. I'm getting better. I'm nearly going to get a rant about the efficacy, the value of a trader. Anyway, thank you guys. Appreciate you all. Same time next week. Get your risk managed. Be careful of this news-driven market. Who knows what's going on out there? Take care, guys. Bye-bye.